Hi guys, it's Chris here from the Trading Mentors. Hope you're all well. This is the advanced settings for scalping gold. There's several indicators we use. I'm not going to go into the complete detail, but gives you an idea of how we use it, why we use it, and why it's so successful. The first thing that we do on the main screen, on the main chart, we have what we call order blocks. Order blocks are, if you've had the training with me before, you'll understand exactly what these are. These are areas of interest. Whenever a price hits an order block, we are interested in what's going to happen next. It's either going to be resistance or it's going to be support. Once it breaks down the support area, this then becomes resistance. The other thing we're looking for during these order blocks is double bottoms, double tops. And this is a 15-minute chart, so we're looking outside in, and then once we get into the trade, we'll actually go to the 5-minute chart to look at the execution. Now, how are these order blocks calculated and why are they so accurate and why are they so important? Let me show you why. And you can do this manually with a little bit of training. So there's several indicators here. They're not normal settings, they are special settings, of course, because it's more advanced. It's a little bit more detailed and a little bit of work to do, but once you've actually got these indicators and the settings correctly and had the training, of course, then you'll know exactly where to enter and where to exit. So here we go. So the first indicator we have is the RSI. The RSI indicates that whenever the price is overbought and whenever the price is oversold. Now, quite often, once the price becomes overbought, it continues upwards, doesn't it? Okay, that's the first important thing to recognize. The second important thing to recognize here is the second RSI. This is a RSI stochastic. This is a pure RSI where we see that it is not overbought here, if you can see this here. So this indicates the price has momentum and is going to continue. What's interesting is that once this becomes overbought as well, this then creates the resistance area, and so therefore manually you can draw a line at that top there. Now we have software here already telling us these lines, so we don't need to draw them, but you can if you want. So let's carry on. Let's see where the next one is. So there's one here, isn't there? So we have the RSI, the stochastic overbought, and the RSI. So there's a line there. So we're interested in that one. There's another one here. So we're interested in that. I've drawn a line already. Never mind. There's another one. So we're interested in this one. Now there's one here just about, I don't know if you can see that. See that the RSI and the stochastic is over. Sold below 30, 28.9, that's fine. And so there's a line here. So that's of interest, isn't it? So this is nothing to do with trend. This is all about support and resistance, order blocks, selling blocks, and getting the important areas highly accurate, in other words. So we're really dialing down into the detail and finding where the resistance and support lines are, where the order blocks are drawn, and which ones are significant, which ones aren't. So let's wind back a bit. So we have lots of things going on here. There's one there. That high there. Now, even though you may expect maybe it to be resistance, it could end up to be support, can't it? So as soon as it breaks through it, that's your buying opportunity. So let me just get rid of this now. So you've got the idea here. Let me show you one that would not have been any good. So you've got an idea. So that once that line is drawn, it's there for a long time. This is a 15-minute chart, so for a few days that is going to act as support. So as the price comes down and you get a double bottom here, here. Now in this instance here where you have the resistance line there, the order block, then you hope the price comes back and creates a double top. That would be the ideal situation. Now it did happen here. I zoom in a little bit. You can see that this order block is significant because both RSIs are overbought, and so therefore the price coming back up to this area is going to sell off. The entry price, I'm not going to go into that in detail, but I will show you how we enter and what happens in this funny thing here. Full training is needed for this, by the way, and I will give that to you as a member. But really, really highly profitable and giving you high quality signals, which is the important thing. So let's go through a few instances. So for instance, let's go back up to here. So we can see at this point here, we've got the resistance line here now, haven't we? And also notice here, on this indicator, it's showing overbought. It's showing overbought here, and the price has to rebound. And this red dot here is the buyers coming in. It measures the buyers coming in. Okay, so here's another one. Let me draw some vertical lines. So there's one there. That's one there, isn't it? So there's one there. Let's see if we can find some more. Not quite there. There's one there. And that's a double bottom there anyway, so you could have. And the green dots are the buyers coming in. There's a few highly successful, high probability trades with high quality signals. So when the price is overbought or oversold, the buyers will be stepping in at some stage. And all you do is have a 2 pip stop below the support line or above the support line. And a 2-to-1 risk reward, which is really important with this case. It's a very, very accurate way of calculating order blocks. Now there's lots of packages under the indicator for order blocks, but none of them are highly accurate. And it's the accurate ones which you want to see. So for instance, this one here drew an order block here to sell. It did sell off, but it wasn't sufficient for us. Okay, so that's a weak signal. Notice the RSI is not overbought here. Only when both indicators are overbought does it become much, much more accurate. And this to here, 1876 went down to 1862, 14 pips. That's 140 pips in currency terms. This little gap here, there's a double top onto this area. Was it legitimate? Was it... Oh, I should have a line there, shouldn't I? Was it legitimate? Yep. Draw a line there. That's your resistance. And where it goes, 1871, went back down to support line of 1862. 9 pips or 90 pips in currency terms. So very accurate, high quality signals giving you excellent opportunities throughout the day to scalp gold. Gold is highly profitable and highly stable, so it's a great one to trade. And also here we've got the Heikin-Ashi, which if you've had the training on that with me, you'll understand Heikin-Ashi. Green means buy, red means sell. Quite straightforward. So from Chris here at the Trading Mentors, hope you enjoyed that. If you're a member and you want to get into this, please direct message me. You've got your own private channels out there, so you can actually talk to me directly to my phone, to my PC. And if you want training on this, give me a message and I will start training straight away.